Most people believe that there's not enough, so survival of the richest and those with the best technology to kill. And this still drives the economy. And if you subscribe to that, that's fine. It's not what I subscribe to. Okay? But when I buy gold, I'm sort of subscribing to Malthus theory. So you know, the philosophy is really good. And then there was another guy named the Luddites. And the Luddites appeared around the time of Adam Smith and the Industrial Revolution. And the Luddites were the people that were very angry at this new technology called machinery. So when they invented the plow, it replaced workers. And these factories said, oh, good, we can produce plows, so we can improve living, you know, we can produce more food and all this. The trouble was these plows and farm equipment and all that stuff they were doing was putting farmers out of work. So the Luddites then went and attacked the factories. And so when somebody says that the guy's a real Luddite, it means they're just an obsolete old bastard, you know. So how many people know a couple of Luddites out there? And as new technology comes in, you know, then people revolt against the technology because it's going to put them out of work. You know, I look at the internet, it's frightening because it's going to put a lot of people out of work. Does that make sense, you guys? Here? So a Luddite would attack it. So that's why the philosophies are really good. So when I came across Richard's books, I said, this is the guy with a new philosophy. This guy's leading the thought. And then that compared with my rich dad's philosophy, you know, so that we just progress and change with it. You have no assets from liabilities. If they're going to keep printing money, so be it. What do we do about it? Does that make sense, guys, here? So there's always a different point of view. But what I did by talking about financial education, it took away the grudge. So look, if they're going to steal your money by telling you to invest in their mutual funds, I'm not saying that's good or bad. You have a choice. If you put money in the bank, they're going to create more debt with it. You have a choice. That's all we're saying. I'm not saying it's right or wrong. Does that make sense, you guys here? So it's a commercial plug for Richard. While he's here, you have a chance to buy his books and get his autograph and avoid the rush when he's famous, okay? All right?
Thank you.
Big hand for Richard here. I'm really happy to see it. Richard, in my opinion, is the next philosopher that will go down this. He explained it. Okay.
Shall I continue?
Keep going.
Okay, so the government is supporting us. We are on government life support in this country and around the world. But in this country in particular, you know, $1.6 trillion budget deficit is keeping us out of a depression. We are on government life support. But this represents a complete paradigm shift in the United States of America. We have moved from capitalism to debtism, now to statism.
Can I add something to that? See, by reading Creature from Jekyll Island, it's another point of view. Statism is another word for Marxism. That's how they see it. It's where the government takes command and control. Communism, which was Lenin and Marx and those guys, they were really into revolution. When they shifted to more sociological point of views, the way they could get government control was not by a revolt, but was through poverty. That the more you could make people poor and more dependent upon the state, then the powers would control the state, exactly as Fuller says. It's the biggest corporation, richest people in the world, control the people through the government. That's statism. Not saying it's right or wrong, but it seems to me that's what's happening. We have more and more people, you know, starting with the Great Depression, Social Security. You know, is Frank still here? Okay. What Frank said to me is, Frank says one of the biggest rip-offs he ever saw was Social Security. It took a person's initiative to be thriftful, to be safe, to be mindful, to take care of themselves. He said, the government will take care of me. So that's statism. Those are most school teachers have that point of view. My father was one of them. The government should take care of people. You go and join the military. Oh, my father was so happy. He says, you'll get a government pension and government benefits and government welfare. He was so happy about that. That was Marxism from communism shifting to socialism. That's the worldly philosophers. Okay? That's what we're shifting to.
So the old economic model in the last couple of decades was debt-fueled consumption. And the new model is now government life support. That's our economic model in the United States. There once was a time when the United States did have a capitalist economy. That time was before 1930. This chart begins in 1930. What it shows is government outlays as a percentage of the economy. In other words, how much the government spends as a percentage of the economy. In 1930, before the Depression, government outlays equaled 3% of the GDP. In other words, for every $100 spent in the country, the government spent $3. During the Depression, this went up to 11%, but that was more because the economy collapsed rather than the government spent more. So as a percentage, it looks more. But then World War II began, and the government spent $42 out of every $100 in the economy. During World War II, the government completely took control of the economy and won the war. It's built a lot of weapons and took control of every aspect of the economy, production, interest rates, everything. After the war ended, it dropped back, spending dropped back to 12% of GDP, but then the Korean War started and the Cold War started, and it went back to 20% of GDP. And it has averaged 20% of GDP now for more than 60 years. So the government has, for more than 60 years, the US government has spent 20 out of every $100 spent in the economy. Until last year, when the bubble popped, they had to spend $25. 25% of every, so $25 out of every $100 spent in this economy is spent by the government. So there's a lot of, in my opinion, there's a misconception about whether or not this country is suddenly becoming too socialist. Well, the fact of the matter is the United States has had a managed economy since World War II.
Thank you for saying that.
It's just become very badly managed, and last year it blew up. It was badly managed and it's blown up.
And that's what 1944, the Bretton Woods Agreement, kind of put us back into a little stability, kind of war ended and all that. But that's what I wrote about in Conspiracy of the Rich, is that we're still paying for the last depression. Social Security, Fannie Mae, Freddie Mac, FDIC, all of that stuff. It has never changed. So we're still paying for it. And the biggest bill is about to come due, which is called Social Security and Medicare. I think Medicare is something like 56 trillion or 76, depending on they measured it. And then George Bush added upon Medicare Part C, which was bigger than Social Security, and now Obama has put on this Obamacare. So we're just slowly and slowly and slowly moving more and more people to be dependent upon the government to take care of them. That's socialism and communism. But it's happening. And it accelerated when they took us off the gold standard, 71.
And Medicare and Medicaid not only benefit the poor and the old, of course it also benefits the big pharma, pharmaceutical companies. And this spending is taking place not just on social welfare programs, but let's be honest, a huge chunk of the US government budget every year is military spending. The United States government spends more on its military than all the rest of the countries in the world combined. And that spending, of course, employs a lot of people, and making those weapons make a lot of manufacturers rich. So it's not just socialism for the poor, it's socialism for the rich.
But it's also always been, what Fuller talks about in Grunge of Giants, it was almost the big corporations behind of it. That's why you read some of the other books, that's why they thought guys like Morgan were on both sides of the equation. Rothschilds are always on both sides of the equation. They financed both sides. They didn't care who won or lost. That's why the story of the Rothschilds is, as soon as Napoleon won the war, that changed the whole stock market and all that. They financed both sides. That's what I saw in Vietnam. So they're financing both sides of this thing. And the only way you can finance a war is two ways: taxes and inflation, printing money. And that's why my prediction is this summer you'll see Israel attack Iran. They need a war to divert our attention to this whole thing. My prediction, just because I understand the value of war. Richard can tell I'm pretty radical on this stuff.
You'll like this. This shows the Congressional Budget Office projections of government debt going out to 2080. Right now, we are here. This is government debt to GDP, something like 50, 60%, 60, 70%. But because of primarily Medicare, it's projected to go to more than 300% of GDP by 2080. Now, of course, this is just not sustainable. This won't happen. Something has to change, meaning that Medicare benefits have to be reduced or taxes raised or both. But this is the current projection. Now,
Wait. Go back to that picture again.
I thought you'd like that.
Let's bypass this one a little bit here. Okay. Please take a moment and discuss what does it mean to you. Ready, go. Okay, really quickly. So like Guy and I, we went to military schools to protect the money. Basically, that's what, and we went military and all this. But what's happened is because of the change in the rules of money, as I write about, we now have this, what we see, U.S. government debt held by the public as a percent of GDP. My question to Richard is, let's look out to, here we are at 2012, let's say, 2010. What's going to happen out here? What do you see happening?
Well, the reason it's not sustainable over the long run is because, of course, with so much debt, just the interest expense on the debt every year would take up so much of the entire U.S. government budget that it couldn't be
Can I add one more
financed.
thing? Quick. How many people have the rule of 72? Okay. What that means is it's going to keep compounding. So when, I think it was some Einstein said the magic was the power of compounding. So that's why they told you to save your money, because the interest would compound. What they didn't tell you was the magic of compounding spending and how much debt it was going to cause. So that's why it's going to start accelerating regardless of what we do right now. It's kind of unsustainable. The Mises Society says we've gone beyond the point of no return now. We cannot stop what's going to happen. Okay, so anyway, that's what they say.
Okay, the next chart shows something different. I think this goes to the whole root of the crisis. This goes to the core of the crisis, not just the U.S. crisis, but the global crisis. It shows, the two lines show the number of people employed in manufacturing in the United States as a percentage of the total. And this shows services as a percentage of the total. Now, the root of this crisis is that the United States economy is simply no longer viable the way it's currently structured, because wages in manufacturing jobs in this country are 40 times higher than in China and other developing countries. So we have been deindustrializing since World War II, and all the manufacturing jobs, which paid quite well in the old days, are all being exported abroad to China and other developing countries. We were told, don't worry about this. In such an advanced civilization as ours, this is just natural. The service sector will take over. And sure enough,
Wait,
service...
one second. This is incredible. Okay, take a look at that. And what this means is when somebody says to a school, go to school and look for a job. The issue is, it's not sustainable. Let's say it another way. When I was a kid, even if you didn't graduate from high school, you did okay, because you could get a job in the pineapple factory or driving heavy equipment or the auto industry. In my town, it was sugar. So my classmates who flunked out of school, they went to work for the sugar plantations, and some were making like 30 bucks an hour. That was a lot of money, where the minimum wage at the time was $1.50. So a lot of guys said, I'm just going to quit school, and I'm going to get a job driving a bulldozer. Does that make sense, you guys here? And what Richard's saying, those are gone. That's why go to school to get a job is an obsolete idea, simply because they can't sustain the wages, much like they couldn't sustain the wages for merchant seamen.
We were told the service sector would take over. And service sector jobs did increase as a percentage of the total, but what is the service sector? Much of it is banking and real estate, and those industries just blew up and had to be bailed out by the government. And much of the rest of the service sector was only profitable so long as the American households were borrowing and spending an extra $1 trillion every year. As soon as that stopped, those service sector businesses became unprofitable and fired their workers, and that's why unemployment shot up to 10% almost overnight. So the hard reality is the United States economy is simply not viable. It produces very little that the rest of the world cannot buy somewhere else much cheaper. And the things that it does produce, like movies, can be bootlegged. You can buy any movie you want in Bangkok for less than $1. So it's not viable, and this is the whole root of the problem. The U.S. economy is the driver of global economic growth. It's still 20 to 30%, 25 to 30% of global GDP, but the economy is not viable, and now it's being supported by this government spending. So these are the projections for the next 10 years of the budget deficit. Here we are at 1.6 this year. And according to the Congressional Budget Office, over the next 10 years, the budget deficit is going to average about the budget deficit will average about $1 trillion a year on average. That will be the deficit.
That means we'll spend more than we tax, right?
That's right. So the government will continue to be on government life support. But all of this spending is not going to fix the problem. The way it's currently targeted is going to be wasted. It's just going to, it's going to keep us out of a depression for many years into the future, but it's not going to restructure the economy and solve the crisis, which is caused by the fact that we can't produce competitively anymore because our wage rates are 40 times higher than the prevailing global wage rate in the manufacturing sector, which is $5 a day. So in the book, what I argue is that instead of spending $10 trillion worth of government debt over the next 10 years and getting nothing, well, I shouldn't say nothing, that will keep us out of depression, but it will also take us just further down the road to ruin. Instead of spending this money and not fixing the crisis, if they just spent $3 trillion on top of this, put $1 trillion into solar energy, put $1 trillion into genetic engineering and biotechnology, and put $1 trillion into nanotechnology, it would give the United States such an unassailable lead in the 21st century technologies that it would lock in another American century. It would allow the United States to produce products that other countries desperately want to buy, that they can't buy anywhere else at any price, like a cure for cancer. Now, at this point, you're all thinking, what I'm proposing, in other words, is something like the NASA space program, but on a much larger scale and with much more at stake than just a space race. Now, I know you're all thinking, but the government can't do anything right. How can I possibly be advocating that the government spend an extra $3 trillion? Okay, put $1 trillion into solar energy. I don't care if the government wastes the first $900 billion. If the last $100 billion develops solar energy, then we have eternal free energy with solar cells across Nevada that would cut our trade deficit practically in half overnight, and the domestically generated electricity could be taxed so that it reduces the budget deficit.
Could I say something to that too? I mean, this is exactly what Bucky Fuller said. That's why when I read Richard's books, I went, God, he's so tracking with what Fuller said. Fuller said the only reason they haven't put there's no solar power is because they can't figure out how to put a meter between you and the sun. And he says, and Fuller's whole idea was that energy was free, and that we haven't figured out a way how to, make a profit at it. So the other thing that happens is when you give solar power to the world, it saves the environment and all that stuff. It's environmentally good. But what else it does, it cuts down operating expenses. You think about how much money you pay for fuel and how much fuel affects everything else. Look at the price of oil, how it affects food. Just looking at it one step more out. You take that away, you reduce expenses, productivity goes up. And that was a lot of Fuller's ideas, exactly what Richard is saying. To use technology, to spend our money appropriately, so technology would lead us out of this thing in some way. But as you know, there are lobbies that are against that, like Wayne Kirk. Anyway. But until then, you know what I mean? So those are the ideas. The problem is exactly as you see in the Hicks game, you have conflicts of interest out there. But that's why when I read Richard's work and I said, this guy's so much in line with where we're at. The other thing that Fuller talked about is that, you know, right now the solar cells are, let's say, this big. With technology, they can come down to this big. And I've already seen them in Wales. They have little chips you can put on your cell phone. And even in Wales, the reason they did it in Wales was because it's overcast. And they wanted to find out if they could get solar power through the clouds. And an American company has already broke through on that. But we have lobbies in this country that'll try and prevent that. Does that make sense, you guys here? So those, I mean, I totally support what Richard says, and it needs to be done. I think it will be done, but it might take a while.
So $1 trillion is an enormous amount of money, even in today's world. We could create miracles with $1 trillion investment.
Yeah, you know, for $1 trillion, Wayne would turn into an environmentalist. Wouldn't you, Wayne?
$1 trillion investment in genetic engineering would probably yield a cure for cancer. And as soon as a government laboratory starts selling a cancer vaccine, not only would it balance that year's budget deficit, it wouldn't take long to pay off the entire national debt. What we need is investment in super high-tech industries so that we can develop new products to sell to eliminate our trade deficit, and new industries that will generate tax revenues like domestically generated electricity from the solar cells that we can then bring our budget deficit back into balance and preferably pay down the debt and try to transition back to economic orthodoxy where we have balanced budgets and something more closely resembling sound money and balanced trade. So we need to develop these industries so that we can balance the budget and balance the trade. Now, I realize that this sounds quite far-fetched and it's probably not going to happen. But I think that at the very least, my goal in writing the book and proposing these strategies, first of all, I didn't want to write such a gloomy book and not offer any solutions. But also, I think, at least I hope this promotes a discussion about what could resolve our crisis. Now, let's look at the crisis with our eyes wide open. This is not something that's going to go away. This is something that's going to get worse and worse as the country deindustrializes and becomes more and more helpless. But it's so unnecessary. The United States will be able to finance these sorts of investments that I'm describing. So even if my ideas are not the correct ones, perhaps someone else could come up with a much more clever idea that would be much easier to implement. If so, I'd certainly support it. But at the very least, I hope this provokes a discussion. Now, in terms of how could this be financed, well, let's look at Japan. Japan's bubble popped 20 years ago. And when the Japanese bubble popped, they had a similar debt level to our government, roughly 60% of GDP. Since then, Japan's been on government life support for 20 years. And now Japan's government debt is 200%, more than 200% of their GDP. Ours is, even at this stage in the crisis, only something like 65% of US GDP. So we could very easily take our debt up to 100%. Japan can go to 200% of GDP. There's no reason we can't go up to 100% of GDP. And that would be trillions of dollars into the future, years into the future. So this money is going to be spent. It's economically necessary to keep us out of depression. It's economically necessary, therefore it is politically inevitable. The only question is it going to be wasted and frittered away the way the Japanese wasted their stimulus, building bridges to nowhere? Is the money going to be wasted, or is it going to be spent wisely? It's going to perhaps be wasted or stolen by special interest groups, or is it going to be spent wisely, restructuring our economy so that we once again become viable and assure ourselves of a new American century? We could easily finance it. Financing is not a problem.
Please take a moment to discuss what you just heard. Thank you. And stop. Thank you, partners. Okay. I'm going to bring Richard Duncan up for about 5 minutes. He's going to tell you what he's going to talk about in the next hour. And he is going to tell you why it's going to get even worse than he's presented before. And the reason I wanted to prepare you psychically and emotionally for this is because if your business team, if your country, if your marriage, if your family is not prepared, it'll fall apart. And so that's the reason I've been slowly torquing this thing up, giving you bad news upon bad news. But Richard's going to talk about, this for about 5 minutes, talk about the derivatives issue, okay? So a big hand for Richard, please. Come up here, please. Scare the crap out of him, man. How many people want him to tell you how terrible it's going to be? Good. That's good.
So you asked for it. Here's the bad news. There are $700 trillion worth of derivatives contracts. $700 trillion is the equivalent of the value of everything produced on Earth during the last 20 years combined. It's equal to more than $100,000 for every person on the planet. Not just every person in this country, but all the people in India and China, all those people making $2 a day. And 90% of these are unregulated and trade over the counter. They don't trade through exchanges. Derivatives have not been around, well, in this form at least, very long. In 1990, there were only $10 trillion worth of derivatives contracts. Someone reminded me at lunch today that in the dollar crisis, I wrote the truly worst case scenario would be that the $165 trillion derivatives market would blow up. So just since the first book was written, it's increased from that level now to 700 trillion.
You went from 165 to 700 trillion since the 2 books?
I think that's right. That's the number they told me, but that sounds about right.
So the debt is almost nothing compared to this.
And so it has grown so rapidly. And as I was saying, 90% of these trade over the counter, meaning they don't go through exchanges. And there is very little regulation. Now, the reason for that is because in 1999, Glass-Steagall was repealed by Congress. That allowed the banks to become brokers and the brokers to become bankers again. But the year after that, the Commodity Futures Modernization Act was passed. And that allowed derivatives to clearly trade through. Before, there was some sliver of ambiguity. They weren't really supposed to trade over exchanges, but the bankers and brokers had started trading them over the counter anyway, despite they were supposed to trade through exchanges, but there were increasing loopholes and they did less and less, and there was some ambiguity. So the Congress passed a law to make it absolutely clear that they would be allowed to trade over the counter and that they would not be regulated. So afterwards, and by the way, that bill was pushed through by Senator Graham, Phil Graham from Texas, who now is, I think, vice chairman at UBS. So these derivatives, I believe, I predict that with not too many more years will pass before this will be revealed as the greatest Ponzi scheme in history. It will make Madoff look like a small town rascal in comparison, with fraud on an unprecedented scale revealed. So just imagine, well, a couple of things. Enron used energy futures to manipulate the price of electricity in California and drove electricity prices to very high levels in California, creating obviously a protest, a consumer backlash. And as I understand it, the consumers demanded something be done, and the California legislature banned trading in energy futures. And at that point, energy prices collapsed, and Enron was revealed to be a great fraud. So they were using derivatives to manipulate energy prices. Now, I think there is a very real possibility that derivatives are being used to manipulate just about every commodity under the sun and other things as well. I think they're being used to help corporations avoid taxes. They're being used to help corporations cook their books. I mean, think about it. Almost every major accounting scandal that's taken place in the last 10 years has involved derivatives. Not only Enron, but also Fannie Mae and Freddie Mac, and even General Electric. Sometime August last year, I think, paid a $50 million fine related to accounting irregularities involving derivatives a few years before that. So it seems to me that derivatives, well, just think about it, 700 trillion. How could you possibly be using this to hedge anything when it's more than 10 times larger than the total global GDP? I think derivatives contracts are being used this year. New contracts are being created this year to manipulate the value of derivatives contracts created in earlier years and artificially creating corporate profits, banking profits. So in my opinion, although it was subprime loans that were the spark that created this global crisis, it was derivatives that were the combustible material that incinerated the financial sector.
If I can explain a derivative, subprime mortgage is a derivative. Then when they took a derivative and they made them CDOs, collateralized debt obligations, and they insured them with credit default swaps. They're all derivatives. So like when you take oil and you refine it to gasoline, it's a derivative. And when you take gasoline and you refine that, you get another derivative, avgas. So the finer the derivative, the more combustible it is. Does that make sense, you guys here? And so they can keep refining it. And the trouble is the basis, is what you're talking about, is not there.
So I think that derivatives contracts are being used to manipulate a whole spectrum of commodity prices, including oil. Sorry guys, where are the guys from Texas? Wayne. You don't have
your prediction is oil should be $8 a barrel, right?
Right, so let me show you this chart. Let's see. The price of oil. Now, before the crisis erupted in 2007, Goldman Sachs was very vocal that they thought oil would go to $200 a barrel.
How many people remember that? It was a big book, $200 oil.
And of course they were taking positions in the market to benefit from the prices as they rose, as their analysts and their salesmen beat the drum that oil was going to $200 a barrel. So it did go almost, well, it went to $140 a barrel. And then what happened? In October 2008, the global crisis occurred, and oil fell to $35 a barrel when Goldman Sachs went bankrupt. But when Goldman Sachs was resuscitated as Goldman Sachs Bank, oil then bounced back to $80 a barrel.
Hold on 1 second. Goldman Sachs shifted from an investment bank to a
commercial bank.
The reason for that then, because they would get FDIC backing or government bailout money. That's why the shift was so quick.
Before, they had been using short-term financing, selling commercial paper, borrowing short-term money overnight, and lending it long, making the classic mistake. And when the markets froze up, and every bank did not have any trust in any other bank, because every bank knew how rotten their own books were, and they wouldn't trade with each other, it became impossible for the banks to get any short-term financing. And so that's the investment. Wall Street died, they say, then, because all the investment banks disappeared. Bear Stearns, Lehman Brothers, completely gone. Merrill Lynch had to be absorbed by Bank of America, and Goldman Sachs and Morgan Stanley also almost went under, but they were allowed overnight to transform into commercial banks, because commercial banks can take deposits from the public, and they can also get emergency funding from the Fed. And that's how Goldman Sachs Investment Bank disappeared and became Goldman Sachs Commercial Bank. But in that short period when Goldman Sachs had no more access to short-term funding and thought they were going out of business, took their eye off the ball, juggling oil prices higher, I suspect, I don't want to be sued, I can't prove this, but it seems quite reasonable to believe, oil prices collapsed. It wasn't because that month suddenly they found so much more oil somewhere, or that the demand for oil collapsed so suddenly. That wasn't the reason. It was that the derivatives turnover fell, and the manipulation through the derivatives market stopped. So something very interesting is occurring now. Congress is debating whether or not they should regulate the financial sector and how they should regulate them. And part of the regulatory overhaul would involve forcing all derivatives to trade through exchanges. And I think if they actually do pass this law to force these $700 trillion worth of derivatives contracts that are now trading over the counter, if they force them to trade instead through exchanges, it'll be very clear, or at least much more clear, who's doing what and why they're doing it. I mean, because just think, if you were Russia, for instance, Putin, pretty tough guy, and the future of your race and your nation depended on the price of oil, and U.S. investment banks are more than delighted to help you manipulate the price of oil through over-the-counter derivatives products that no one can regulate or see, why would you not push up the price of oil to $100 a barrel? Now, from my point of view, we were told that there's a demand for oil is surging, the supply of oil is not. But in this crisis, U.S. demand for oil is actually dropping, and we're the big buyers. And supply is still increasing. Just in the last 9 months, there have been major finds of oil off the coast of West Africa, off the coast of Brazil, in the Gulf of Mexico. But demand has been, of course, these wells haven't started producing yet, but still, and demand has been dropping. So we now have more excess capacity of oil in the OPEC countries than we've had in 20 years. They have cut back on their production. And similarly, in the United States, in Oklahoma, where the oil storage tanks are, they're full of oil. They haven't had such excess capacity of oil in, again, 20 years. Well, 20 years ago, oil was trading below $20 a barrel, and the global economy was far, far healthier then than it is now. So if they actually force these derivatives contracts to trade through exchanges, I think there's a real possibility that commodity prices would drop very sharply, because it wouldn't be so easy to manipulate them any longer. But also, this would also have all kinds of implications for the financial sector. They're also considering forcing the banks to spin off all their derivatives activities completely, which would mean that all the banks would make far less profits than they do at the moment, which is disastrous for their earnings and their PEs and their share price. So it'll be very interesting to watch the kind of financial regulation that takes place, because it could have significant impact on asset prices and as well as the profitability of banks. And in fact, if they actually force the derivatives to trade through exchanges, $700 trillion, if there is fraud in this, as I suspect, if this truly is a Ponzi scheme, just imagine if even a 1% loss ratio would amount to $7 trillion of losses. The whole U.S. GDP is only $14 trillion. So a 1% loss ratio is 50% of U.S. GDP. If this sort of regulation reveals fraud on this scale, or 10% loss ratio would be $70 trillion, bigger than global GDP. It could spark a new round of the financial sector crisis that would require another government bailout, but probably on a much bigger scale, involving most likely more and more paper money creation.
Okay. That's the good news, all right, guys, here now.